Welcome to The Explainer. Today, we are digging into a trading philosophy called ICT, or Inner Circle Trader. And it presents a totally different way of looking at how the financial markets really work.
You know that feeling, right? If you've been trading for any amount of time, you've definitely felt it. That nagging suspicion that the market is somehow working against you. Maybe your stop loss gets hit just before the price shoots up in your favor. It feels like something's going on behind the scenes, but you can't quite prove it.
All right, so let's get into it. According to ICT, that feeling, it isn't just you being paranoid. It might actually be by design. They call this the market efficiency paradigm, and it basically splits the market into two very different camps. A small inner circle of what they call smart money, and then, everyone else, the uninformed money.
So first up, let's talk about the way most of us are taught to see the market. ICT calls this a great market facade, something built to fool most traders. Okay, so on one hand, you have the common belief, right? We're taught that things like indicators and trend lines are what move the market, that our collective volume as retail traders is the main force. But ICT, it claims that's all just a smokescreen. The real story, they say, is that a small, powerful group is really driving the price, and we, the retail crowd, we're just the liquidity they need to make their moves. And this quote right here, it really sums it all up. We are led to believe that we are giants. We push price around, and we don't. The idea is that this huge crowd of retail traders, the so-called uninformed money, thinks it's the one in charge. But in this model, they're not the engine. They're the fuel. All right, so if retail traders aren't running the show, then who is? Let's take a peek inside that smaller circle and see who ICT says is the real smart money.
And ICT is super clear on this. Smart money means the banks, period. They're the real liquidity providers. They're this quiet, small group that acts like the engine, the motor, for the whole market machine. And their business? It's all about running the market for their own benefit, not for us speculators.
Okay, this is where it gets really interesting. If the banks are the engine, how exactly do they move the price around? Well, ICT claims it isn't random at all. It actually follows a very specific set of rules. Get this. According to ICT, you're not trading against other people. You're trading against an AI, a computer program that delivers price in a totally systematic way. It's built to prey on our classic human emotions, fear and greed. But at its core, it's just following a predictable, unchangeable algorithm. And that algorithm, it's broken down into this 4-stage cycle that just repeats over and over. ICT says this governs all price movement, no matter the time frame. You start with consolidation, then you get an expansion, and after that, price can either retrace or reverse. Then the whole thing starts over. Now, here's the golden rule, the most important part of this whole thing. The process always has to start with an expansion out of a consolidation. You can think of consolidation as the market coiling up, building up orders, which makes that explosive expansion pretty much inevitable. And what that means is there are some things that just can't happen in this model. Price can't go from a quiet consolidation straight into a retracement or a reversal. Think about it. It hasn't gone anywhere yet. That expansion has to happen first. It's a simple rule, but it's a huge piece of this whole puzzle.
And you can actually see how this model gets applied to a typical trading day. The theory goes that the quiet Asian session, that's your consolidation. Then the London Open kicks off, and boom, you get the expansion, or what some call manipulation. The New York session might bring a retracement or a reversal, and then you see another move into the London close before the whole cycle resets for the next day.
So why does all this matter? What's the big takeaway? Well, understanding this framework isn't just about learning a new indicator or strategy. ICT says it's about a complete and total shift in your perspective on the market. And they use this really powerful metaphor to ask a pretty direct question. Are you a lamb or a lion? Are you just part of the herd, basically food for the bigger players? Or are you going to start thinking like the predator, the lion, the one who actually understands the rules of the jungle? And really, that's the core message here.
The big idea from ICT is that if you want to change your trading results, you have to first change how you see the market. It's asking you to stop seeing it as just this chaotic mess of buyers and sellers and start seeing it for what they claim it is, a precisely engineered machine.
So, if you found this explainer on the ICT framework useful, do us a favor and like this explainer. And make sure you subscribe to the channel so you don't miss our next one. And as always, safe trading out there.